It's great to join you here for Istanbul Fintech Week. I'm Nick Kerigan, Managing Director and Head of Innovation at Swift. And I'm going to be talking today about digital assets and navigating the new reality. So, what is that new reality? Well, the new reality, as we've just heard from that metaverse panel, the new reality is that all aspects of our lives and our economies are becoming digitized. And you think about the experiences that we used to have in the physical world, and then you think about how the digital world is now being used to improve those physical experiences. And so, as we heard in the last panel, phygital is a reality that is happening and is happening in all parts of our lives. We actually, in some ways, don't have to wait for the metaverse for this to happen because many of these experiences are now on our phones and on our devices every day and every second of our lives. Now, how does this concern finance? Well, I think the key thing to think about is that money is not immune to this digital trend. Money cannot remain in purely physical form if the economy is moving digital. And so when we think about digital money, sorry, I'm just having slight difficulty moving the slides here. When we think about digital money, we've seen this trend happening since 2009. So it started off with cryptocurrencies in the form of Bitcoin and others, but then really expanded as a trend as we saw the emergence of stable coins. And then more recently, we've seen the emergence of central bank digital currencies, or CBDCs. And CBDCs are a space where we really see growing momentum here. Over 100 countries across the globe are now exploring a CBDC. 11 countries are now already live. And according to the OMFIF Future of Payments report in December last year, which surveyed central banks, 24% of central banks are planning to introduce a CBDC in the next 1 to 2 years. So we don't take a policy view on as for or against CBDCs, but we do see this is a growing momentum towards digital money. And in that context, we need to address the opportunities and challenges that result from it. But it's not just money, it's also assets. So assets are already being converted into digital form. We saw that first of all with the creation of digital native assets like NFTs. And now what we see is the acceleration of this move of digitization or tokenization into more traditional assets as well, such as stocks and shares, and now increasingly into private market assets as well. The consultancy BCG estimates that the tokenization of those global illiquid private market assets could be a $16 trillion opportunity by 2030. And the World Economic Forum predicts that 30% of issuance and 40% of asset trading volumes will shift to tokenized assets in the next 5 years. So this is a tremendous potential and movement in both in the asset space and in the money space. And then when you start to see those things coming together, you can also see the potential for those two worlds converging. Historically, securities and payments have been quite separate, with people looking for the solutions to things like delivery versus payment. With the digitization and tokenization happening, actually that could become much more smooth and straightforward, and the convergence itself could open up many new economic opportunities. But equally, this has a catch. And the catch is that there's a risk of digital islands forming as a result of this new innovation and trend. All of these new forms of money and assets are being created with different rules and standards to solve for different use cases, and indeed often on new and different technology platforms. We heard about a bit about blockchain in the previous session, but blockchain itself is not one technology. You have many different types of blockchains: private, permissioned, public. And indeed, even within those different blockchains have very different characteristics. Corda is not the same as Quorum, and that is not the same as Hyperledger Fabric or Besu. And so what that means is that while there is the opportunity for convergence, there's also the risk of fragmentation of the global financial system. And therefore, there's a need to create interoperability between those new forms of money and assets and their platforms, and also interoperability between those new forms and existing forms of money and assets, which will undoubtedly coexist together with them for many years to come. So how do we do that? Well, at Swift, it's been our role to connect up the world for over 40 years. We were formed almost 50 years ago now to solve one of the biggest industry challenges in payments at the time, which is how to move money cross-border. And we've been continuing to innovate over that almost 50-year period, introducing new innovations into both the payments and securities environments. We now see our role in this future reality of digital assets to be able to ensure that digital assets can sit alongside traditional ones. And our mission is to ensure that that future is frictionless. In other words, that we can enable instant and seamless transactions, both in digital payments and in digital securities. So how are we doing that? Well, let's talk a little bit about CBDCs first. In the CBDC space, we've been researching central bank digital currencies for now over 3 years. And in 2022, we created an experimental solution that can interlink different country CBDCs and their networks together in what we believe is an effective and efficient form. The design of the solution that we have created basically allows a country's central bank and their financial communities to create the CBDC as they want to solve whatever use case that they want, retail or wholesale, to create the business rules and policies that they want around that CBDC, and to put that CBDC on the technology platform of their choice, be it a centralized architecture or be it a decentralized or blockchain architecture. With a component that we call the CBDC connector, we can then connect that country's CBDC network to the rest of the world to enable cross-border payments with that CBDC. We think this is potentially a highly effective solution because it will enable a high level of straight-through processing and therefore a high level of instant and frictionless transactions. And we also think it's an efficient solution because by integrating this CBDC connector once, the country's CBDC network is opened up and can connect to any of the other CBDC networks or existing payments infrastructures that are already connected to SWIFT. In that sense, it's a hub and spoke model that can enable CBDCs to and existing forms of money to flow efficiently around the world. This was a solution that we built in experimental form last year. It's working on the SWIFT environment, and we published the results of that experimentation in October last year, just ahead of Sibos. But we didn't stop there. We knew that in creating this experimental solution, we also made many assumptions about how CBDCs will work in the future. And this is a constantly evolving space. So what we did is we took the entire infrastructure that you can see here on this diagram, and we put it into a sandbox environment. And then we opened up that sandbox environment to 18 central and commercial banks in the fourth quarter of last year. Those central and commercial banks include some names that you might have heard of, like the Banque de France, the Deutsche Bundesbank, and the Monetary Authority of Singapore, together with major commercial banks such as HSBC. Those 18 central and commercial banks conducted individual experimentation using this solution. Over the course of the 12 weeks, they conducted almost 5,000 CBDC to CBDC and CBDC to fiat payment transaction simulations. And we were able to learn a huge amount through the feedback that they provided us through that exercise. In addition, we gathered the whole group together every 2 weeks and discussed in detail and depth some of the important design considerations around CBDCs. And we learned a huge amount from that exercise because those participants were gathered from across the globe, which meant that insights and learnings that have been shared in other projects could then help us to get to the right solution much quicker. We then published the results of that sandbox exercise just over a month ago on the 9th of March and received some great feedback from the financial community as a result of that. The headline from the sandbox exercise was the 18 participants saw clear potential and value in this CBDC interlinking solution. They encouraged us to develop it further, and they said that they wanted to continue to work with us on this journey as we take that from experimentation into something more robust, which is exactly what we're doing at the moment. At the moment, we are developing a beta version of this solution, which we aim to start testing with key central banks shortly. And we aim also later in Q2 to open up a phase 2 of the sandbox that I've just shown you to new and different use cases. So moving from payment transfers and payment versus payment transactions into a wider set of use cases. The goal here is to create a genuinely useful solution that can enable CBDCs to work seamlessly in cross-border payment transactions. But it's not only digital money that we're working on, it's digital assets as well. So on a parallel track, we've been conducting experiments around tokenized assets, which we did through 2022, working with Northern Trust, Clearstream, Citi, and the technology provider Settle. We looked at how digital assets could be tokenized, detokenized, and used in delivery versus payment transactions in a similar way that custodians and other securities market players interact with SWIFT today. In this experimentation, we were able to use the SWIFT securities messages, what we call the NT500 series messages, in order to successfully coordinate those transactions. And we were able to connect to different digital asset platforms on different technologies. And we were able to successfully demonstrate the tokenization of a traditional security, the detokenization of that, and then also the delivery versus payment transactions that occurred on one tokenized asset platform, but more excitingly, across different tokenized asset platforms that were connected to SWIFT, so able to mint and burn tokens across different platforms, and then also settled against different cash leg types, such as an RTGS cash leg transaction, a GPI transaction, and a simulation of a CBDC. The results of these experiments were also published in October last year, and now we're also going further in this space too, looking in particular at how we can enable the interoperability of different digital asset platforms that are on both private and public blockchain infrastructures. And that's an exciting space that we will continue to develop and collaborate with the industry. You can learn more about both these sets of experimentation through the reports that we've published, and feel free to scan the QR codes that I'm showing on screen now. We're very much open to further collaboration with the financial services industries and fintechs in Turkey and across the region. We look forward to working with you on that. In conclusion, none of us knows how the world will turn out in the future. The events of the last few weeks and months have clearly shown us that the world is uncertain. But we're strong believers in the power of collaborative innovation, of bringing the financial community together to solve for some of these new challenges and new opportunities that they create. I hope you've seen that through the work that I've just described, the experimentation that we've done already and the experimentation that we will take forward. We are going to continue to work with the financial community in order to help navigate the new reality of digital assets and the exciting potential that it could unlock for our economies. So with that, join us to shape the future of finance together. Thank you very much.